This is not financial advice. This is entertainment only. What is a way of investing in crypto in the stock market? Today we're going to be talking about the Grayscale funds and ways that you can invest in crypto in the stock market without having to go to a separate exchange. I'm adding the Grayscale funds, the Grayscale Bitcoin Trust, and the Grayscale Ethereum Trust to my hot stock list. All the stocks on this list you can find at the end of this video. Be sure to check this list for future buys on a pullback in the stock market, which is sure to come. Let's ride these rockets to the moon. I'm going to be talking about three cryptos that I think are three interesting cryptos that have a rationality for investing in them. The biggest crypto, of course, is Bitcoin, which you can buy directly in the stock market through a trust fund called the Grayscale Bitcoin Trust Fund. I'm adding Grayscale Bitcoin Trust to my list of hot stocks because I think Bitcoin is getting ready to make a run for it, and it's going to bring the other cryptos up with them. Let's look at some of these Grayscale funds along with the significant cryptos. The second biggest crypto, which you can buy on the stock market through a trust fund, is the Grayscale Ethereum Trust Fund. Its symbol is ETHE. Ethereum is like Bitcoin, except that it has much broader goals. The third crypto I'm going to be talking about isn't on the stock market, but I'm going to be talking about it because it's a very interesting update to Ethereum. That interesting crypto is called Cardano. As Kathy Wood has pointed out, Bitcoin is the reserve currency of the crypto world. Ethereum can be used to codify, decentralize, secure, and trade just about anything. It makes use of smart contracts, which are very complex and which I'll simplify to almost a criminal extent here. A smart contract is like a regular contract, except it's an automatic thing that happens under certain conditions, and neither party knows who's on the other side of the contract. The example that's given, the simple analogy, is of a vending machine. A vending machine dispenses the candy bar to you if you put the right amount of money in and you make the selection, and under those conditions, it grants you the candy bar. With the vending machine example, neither the person receiving the candy bar nor the other side of the transaction are aware of each other. The smart contracts are decentralized because there's no bank, there's no middleman in the middle of the transaction. These smart contracts will become increasingly important in the future. Right now, my impression is that it's mainly used with trading, probably international trading especially, where they don't need to know the other end of the contract. They just need to know whether the product's been paid for, whether it's been delivered, and whatever other constraints they want to put on the contract. A more local example is Home Depot, where they use smart contracts to smooth out interactions with suppliers and to correct any mistakes made in the transaction. And they can do it faster and easier, and they can do it on this automated basis because they're doing this over and over with probably largely the same suppliers, or suppliers who they only want to fulfill certain conditions to have them be paid and recognized. Bitcoin and Ethereum verify the transactions with proof of work, which is having computers expend immense amount of energy to solve very difficult computational problems to verify the transactions. Having the computers solve these complex computations makes the blockchain for Ethereum and Bitcoin very secure. But there is a big problem with it in that it is not very sustainable. To process one transaction on Bitcoin takes the amount of energy that the average family would use in a week. Also, using the proof of work makes the transactions very long. They're over 10 minutes, which is too long for everyday usage. So Bitcoin, on a practical basis, it ends up being used for very large items or for very large amounts of money that people want to put in Bitcoin to keep it as a store of value. Charles Hoshkinson invented Cardano to address some of the problems with Ethereum. Charles Hoshkinson was one of the co-founders of Ethereum, so he knows that system very well, and he knows the problems with it. And Cardano was invented to use a different system of verification, which did not require mining. They call it proof of stake. In Cardano's proof of stake system, it is much faster because they don't do mining. What they have is within Cardano's holders of Cardano, the holders themselves more or less insure the transactions. They insure the transaction by volunteering to be stakeholders. And for being stakeholders, they put up a certain amount of their Cardano to be used to guarantee transactions, which they will get some extra Cardano. They will earn extra Cardano for providing their Cardano to back up transactions. And these stakeholders that do this are called validators. And the validators, they get a reputation for being good validators or not so good validators. And the good validators are referred to more often. And anyone they have any questions about, they burn part of the stake that they put up. So they're very motivated to be honest because they're going to lose money if they're not honest. The proof of stake system is turning out to be the solution that they are looking for to get it to where Bitcoin could be more of a transactional thing, that crypto could be used more as a transactional thing. Bitcoin will always be used primarily as a store of value, simply because it takes so long, except maybe on big transactions or big amounts of money. Countries that have not very good currencies that are unstable, that they would prefer to use Bitcoin. Countries like Nicaragua have recently gone to using Bitcoin as their primary currency. Charles Hoshkinson talks with the leaders of Ethiopia about converting their currency to Cardano because it is more secure. They need crypto in countries where their currency is very inflated and unstable, and people lose so much value in such a short period of time. Charles Hoshkinson also claims that Cardano will have positive social effects upon the countries that use it, although it's not clear to me what that will be. But Charles Hoshkinson wants it to be, he wants Cardano to be more than just legal tender, and I'm waiting to see what that's going to be. So if you want to own Bitcoin primarily through the stock market, the easiest way to do that is through the Grayscale Bitcoin Trust, which is GBTC. And if you want to own Ethereum through the stock market, the Grayscale Ethereum Trust Fund is the way to do that. I own some Cardano through the Coinbase app, and it is a very good app. They take significant fees, and the trust funds, they take fees also, but it's probably not going to be any more than you would pay through an exchange. One of the big attractions of Robinhood is that you can trade Bitcoin and Ethereum without paying fees. As Robinhood buys Bitcoin and Ethereum and then sells it to you. So which of these cryptos should you go for? I'm investing some money in each of these three, as I believe they all have different kinds of potentials. I never want to have more than 1 or 2% of my net worth in crypto, because it could go to 1 million or it could go to 0. 80 to 90% of the time, almost all of crypto follows the movements of Bitcoin. They've tried to predict the movements of Bitcoin based on how natural resources value tends to change. They're comparing Bitcoin to other natural stores of value like gold and silver, and how their price tends to change. They call this model of how a store of value, asset value changes. They call this model a stock to flow model, and they try to predict what the price of Bitcoin is going to be according to the stock to flow model. Using this stock flow model, the price should be over 80,000 right now, and they believe it'll be around 100,000 by the end of the year. It's also caught my attention that Cathie Wood has made Grayscale her second biggest holding in her ARK Next Generation Fund. Now, this fund its symbol is ARKW, ARKW. It's a way of holding internet and next generation innovative stocks while also holding 5% crypto. So that's another way of getting some crypto into your portfolio if that's what you're wanting to do. What's interesting is that Ethereum is moving to a proof of stake work to be more sustainable. So they basically want to do what Cardano is already doing, and they will get there probably sometime in early 2022. Coinbase will pay you to buy a stake in Ethereum 2.0. Now, you'll receive some interest on that, but you can't use the money while you're a stakeholder. So you're basically going to have it there probably till at least 2022. I created this chart comparing Grayscale Bitcoin Trust to Grayscale Ethereum Trust, and it looks like they've been going down and slumbering for a while now. But now they are starting to pick up, and I think we might be getting ready for another run, and I hope it's towards that 100,000, so we all have a Merry Christmas. So for me, especially in regard to Grayscale Bitcoin Trust, I believe the rockets are ready to fly. Here's my list of stocks to buy on a pullback. I've made a video that includes comments about each of these stocks for your information. You might want to check it out. Be sure to hit the notification bell so you're alerted for future videos, and like and share and subscribe if you can. Thanks a lot.